In that trend, so are you seeing more of a, like, they're doing loans, almost like a hard money loan themselves, or is it more they're buying in equity positions in properties where they're getting a return and maybe even a kickback on profits?
Lots of like multifamily syndications, or like a REIT, like a real estate investment trust, a private fund, of course, being self-directed, storage units, commercial. So, that kind of that passive, here, of course, that same, let me invest in your
Yeah.
in your company, and I'll sit back and take the check, whenever it comes in. So those are kind of the things that we see investors doing more often than we have.
So what are some of the benefits of doing that through a self-directed IRA?
Sure. So through a self-directed IRA, of course, all the profits do come in. Of course, in a traditional IRA, the pre-tax IRA, the taxes go in the returns go in tax-free for now, but they all grow tax-free or tax deferred. So at 59 and a half, the magic age for retirement for the IRS, when they start taking those distributions, they pay the taxes then. And it's taxed at whatever your income tax bracket is at the time. In a Roth IRA, as long as you have the Roth IRA open for 5 years and you meet 59 and a half, everything comes out tax and penalty free. So, the benefits of doing it in a self-directed Roth IRA, all those returns are coming out, completely free. So that's an amazing way, to build a nice, little retirement nest egg there. So, by doing these passive investments that way.
Yeah, a lot of people talk about doing 1031 exchanges, but the same net effect you have through your Roth, because it is that tax deferred growth or tax free. So that's why we've used accounts at Quest, but we also borrow a lot of money from Quest clients.
Absolutely. We definitely have clients that, hey, I just want to be the bank. I just want to loan my funds out. Of course, people loan money out for all sorts of reasons, but I would say probably the majority is to fund other people's
Yeah.
real estate projects if they're doing fix and flips, or, buying or seller finance or what have you. So again, that passive way, I don't want to deal with all that stuff. Let's meet an attorney's office and see what, terms we can come to together on this promissory note. And, we have a great system where the borrower can just click on a website, pay that loan back directly to the IRA. So we try to make, of course, as easy as possible. But yeah, of course, we see lots of promissory notes as well.
Yeah, and it really is the most passive way you can get involved, because you can buy a rental property and then let a management company take care of it, but you're still the buck stops with you when a repair item comes up or whatever. Whereas when you're doing a loan, or you're a silent partner or equity partner in a deal, it's not perfect, but you're not actively in the day to day, especially if it's a loan. Now, it's not completely passive in the sense that you can just blindly do it without any regard to risk and underwriting. Like, you still got to do that stuff.
Of course, do
You
your
look
due
at reports.
diligence.
But from a day-to-day operations, that part is completely passive.
For sure. I mean, obviously, please, please, please do your due diligence, on all investments, on people that you're loaning to, if you're loaning to a company. But yeah, I mean, for the most part, you set it up how you're going to set it up. You've come to terms with the borrower. This is how it's going to go. This is what happens if you don't pay me back. And it's kind of a set it and forget it, from there.